Welcome to Dukascopy TV, I'm Elaine Stenson. The Eurozone's trade balance swung to a much smaller than expected surplus in January compared to a year ago, as imports fell and exports rose only slightly. Meanwhile, the Eurozone's annual consumer inflation rate fell to 0.7% last month. So just when it seemed that Europe was in better economic shape, Eurozone inflation is back at the very low levels that forced central bankers to lower rates last November. Patrice Muller, managing partner with London Economics, joins me now. The ECB raised some eyebrows last week by keeping the main interest rate at a record low. Patrice, were you surprised by the ECB's hawkishness?
No, not particularly. While inflation was coming down and is very low, that is to a large extent a normal development in the current stage of the cycle, where inflation falls as long as there is an output gap, and we haven't closed the output gap yet. And at the same time, the strong appreciation of the euro vis-à-vis the dollar in recent months has also moderated import inflation. So I think they are sitting on the fence at the current time, trying to figure out what exactly is going on. What's going on. But I was not surprised. There were no reasons to change radically policy course at this stage.
ECB policymakers insist they still have policy tools available if they see a risk of inflation veering off track. If the ECB don't introduce a QE programme, what are the other options that might be considered?
Well, they have a sort of a virtual QE programme. Basically, Draghi said they would do whatever it takes to get the economy going again. So we don't know exactly what they would buy, what type of assets, the maturity they would consider, and so on. But in their sleeves, they have a virtual QE program. And over the weekend, last week, Draghi spoke again, saying that while at the present time he doesn't see a big risk of deflation, he's prepared to take any measure that is possible. Basically, the only measures which are possible when you have such a low rate is that you grow the balance sheet of the central bank quite rapidly by buying up all kinds of securities in the marketplace to provide liquidity in the marketplace and to incite financial intermediaries to lend on.
Patrice, what is the risk if the ECB fails to act early enough to prevent deflation?
Well, that is a very interesting question. It is almost the counterpart risk that policymakers faced always, that they would act too slow to prevent inflation. The risk is not nil, far from that. One has to go back to the normal patterns of various economic aggregates. So when you have a recession, output falls first and then starts recovering, and inflation follows with quite a lag. And as long as you have an output gap, you expect inflation to continue to come down. Now, the question is whether you overshoot because inflation is so low and well below the target of the European Central Bank of 2%. So I would say the risk is significant. It's not to be ignored. But at the present time, we haven't seen sign that it is really an ongoing issue. If you look at economic sentiments of consumers and so on, they are not yet at the stage where they are postponing purchases because they think it will be cheaper next month. Actually, they are becoming more bullish about durable expenditures, semi-durables, and so on. So we are not yet in the Japanese context where people basically held off spending because they knew it would become always cheaper.
There is talk of Europe becoming the next Japan, which for over 2 decades suffered from long-term deflation because its central bank failed to stoke inflation with monetary policy. How likely a scenario do you think that this is?
Well, one of the issues Japan faced, which at least many observers agree on, is that they took a very long time to clean up their banking system, which meant that banks were hampered by bad loans for a long time and therefore were not willing to lend on, which was one of the drags on the economy. And there is a view among a number of people that in Europe are facing a similar situation where we are not willing to completely recognize all the losses sitting on the bank's balance sheets. However, the exercise which the ECB is going to undertake very shortly, where they are going to review the quality of all the assets of all the major banks, I think, if done seriously, it would be a day of reckoning and maybe hurting for a number of banks, but at the same time would allow the financial system as a whole to turn the page and to move on. So I don't think we're facing the Japanese situation where forbearance was going on for so long that it created this vicious downward spiral. I think finally policymakers have accepted here in Europe that we need to clean up the financial sector completely to get the financial sector back to operate normally and basically act as an intermediary between savers and users of funds. That was missing so far. There were a lot of talks about all kinds of systems to be setting up, but the fundamental issue was never really tackled. Hopefully, with this exercise, the quality asset review exercise, we will get to this and be able to move on.
Okay, Patrice, thank you for joining me on the line today, and that's all from me for now. But do check back for further updates and interviews throughout the day. Bye for now.